Hey folks, welcome to the REIN channel. I'm joined today by Mark Ferris of Ferris Capital Partners. Mark, how are you? Thanks for joining me.
I'm doing great, Patrick. Yeah, thanks for having me.
So we got some things going on. I want to hear from you. It's been a while. It's been a few months since we've actually had a conversation,
Yeah.
and you're very accomplished in the real estate space, and particularly your focus in the past while has been on the U.S. And I want to talk to you about that. But before we get there, when we're talking about real estate and investing, how are you seeing, given what's happened in 2023, what are you looking forward to, or what are you looking at into 2024? Everything from interest rates to kind of what are the deals that you're seeing, perhaps. Just give me an overview of what you saw in 2023 and how it's going to change into
Yeah.
2024.
Yeah. Well, let's just say it hasn't been easy for a lot of real estate investors out there in the sense that from an emotional standpoint, I mean, just look in the news, it doesn't feel good to be a real estate investor now. So I definitely understand how a lot of the listeners are feeling that are out there. But with that being said, it just reflect back from when I got into real estate in 2007 till now. These periods of lull, these periods that it doesn't feel good to be in real estate have always been the best times to invest. When you look back in retrospect, it just doesn't feel right. So I think those emotions are actually a very good thing. So it was interesting over 2023, we saw pricing starting to come down. It took a while for sellers' expectations to really come down and realize that the market truly has changed. So we didn't get a deal under contract that really penciled out until the end of the year, and then we got two together because we felt that the pricing came down to a point, in that 20 to 30% range in the markets of, say, like Florida and South Carolina, to a point where what, the deal actually makes sense. And so it's actually been a very exciting time for us because this is like everything is on sale. And we just got to stay out of the news and just look at the fundamentals of the deal. And so we're really bullish right now on investing and buying. And then coming into 2024, I think that it's the first 6 months is going to continue to be rough for a lot of real estate investors and investing in general. I do think by the summertime, there's talks about multiple rate drops happening. I think that if real estate investors, especially with large holdings, can hold out for the first 6 months, I think that's it should be the goal. But as rates start coming down, we do think that the emotional, we'll say, because real estate is very emotional in the sense of buyers jumping into the market and really shifting an overall, market from a buyer's market back to even like an even market or seller's market. So I do think that there's going to be 2 or 3 interest rate drops by mid-year, coming to the end of the year.
Yeah.
I think that the list to ask, the list price, the asking price to the bid price is going to shrink as well moving forward. And I think that, these red states that we're investing in are with low taxes. They're going to continue to do extremely well coming into 2024.
Well, let's break down a couple things. I mean, you said a lot there, and we're going to talk about an opportunity that you've got on the table right now. Back to what you talked about, some deals penciled right at the end of the year. But before we get there, I want to talk about. I mean, you're Canadian. You went south. We're seeing more and more Canadian capital flow into the U.S. Can you give me some sense of why you're seeing that happen? What you think's behind it? I mean, let's face it, the U.S. Canadian dollar is not great. It's not like we're buying the U.S. dollar on sale. What are you seeing, and why do you think we're seeing so much capital flow into the U.S. market? Because I'm seeing it right across the board.
Yeah, for 100%. And we've always done really well in Canadian real estate up until a few years ago, and it came down to two things for me personally and for our real estate investors. Is number one, the deals just stopped cash flowing, in particular in Ontario.
Yeah.
And that's tough. It just became, even myself as a real estate broker, like it was hard to find deals. And
Yeah.
so there's really a lot of investors are forced out. So either go You can go west, you can go east, or you can go south. And for me, one of the reasons why I really like south in the markets that we're investing, in particular, Charleston, South Carolina, and Tampa, Florida, are the kind of the two main markets we really like, is that they're very diverse in their employment. And so if one segment of the market really gets hit, we're insulated in these markets. So that is a really big push down to the south, and why we went down there. Diversification was another one. And the other reason we really like it down there compared to, say, Ontario, where there's rent control, that's where,
Yeah.
as you're starting to do more scale, like, you just can't execute on a business plan where, you're, say, you can only raise by 2%. For the listeners, rent control, you have a certain amount you can raise every year. But
Yeah.
even if you're, say, 2000, newer than 2018, and you can bump up, if you have a problem with a tenant, even in Ontario, just try going to the board and get a hearing, and they're backed up months and months now. So that's where I just saw the landscape, and I saw how business was being done down south. And that was really up to us to create a structure, Canadian friendly structure, to be able to, take advantage for Canadian investors down south.
It would be so awesome if our politicians could wrap their minds around the limitations and the challenges that rent controls put on not just the investors, but understanding that rent controls are what messes up the whole market. And all they have to do is go to Western Canada, as an example, or into the US, to see where there are no rent controls and the system is far better. That's kind of a controversial topic. I could talk about that, as I'm sure you could. That's not what we're here to do today. But
what you just said there, though, Patrick, was really wise. Like, just go research these other markets and just go have conversations with tenants, like both sides, on both sides of the fence there. And I think that would be a great exercise for our leaders to go and do.
And they're not doing it. Again, what happens, this is, again, it's kind of controversial, but politicians, when we look at government, it's politics over policy, and often they go politics rather than pay attention to the policy, and that's where things get out of control. Again, I won't go down that rabbit hole, because I want to talk to you not only about the project that you've got going on, but I want to share, some, I think, what are valuable insights to what's happening in the investment world today. I mean, I work with and have worked with thousands of real estate investors over the years. We've been through these cycles before, and yes, it's different because the cause is there, and there's global macro issues, and there's central banks involved, and there's more polarity and divisiveness and wars. I mean, there's so much going on. But what I'm seeing happening, even within our own REIN community, is that people are just sitting on the sidelines and they're doing nothing. And they're kind of frozen in the confusion and the uncertainty, and quite likely the fear of what's going on in the market. It's so a really emotional time. You and I were talking off camera, and there's a couple things that is interesting about all of this. Number one, people love to buy into a boom cycle. And so when everybody feels like a genius, real estate's only ever going to go up. And, this is where they get into the emotion of the excitement. Everybody's getting rich in real estate. Yet ultimately what happens is that cycle shifts. We go into a slump cycle, such as we are now in many regions of Canada, for example. And then ultimately people just go, oh, I'm out. Yet this is where the opportunities exist. And by the way, there are lots of opportunities for cash flowing properties in Southern Ontario right now, many cities in Ontario. But that's all to say this: we still bump up against the interest rate challenges that people are feeling in the shorter term, and then certainly qualification for mortgages and what's going on in that investment space, which is all bringing me back to Ferris Capital Partners, which is, as a trusted partner of REIN, what I love about Ferris and what you guys do is you can put your capital to work. You can put it to work with a corporation, with a group like yourself that knows what they're doing. You don't have to apply for, you don't have to qualify for a mortgage. You're not interested. You don't care about interest rates. And quite frankly, you don't care about, whatever rental and landlord restrictions might happen in the world, rent controls. And so I just wanted to say all of that. So for those of you who are listening, Mark is, Ferris Capital is what they do, and there is great opportunities that he's going to share with us. But this is the time to get capital work, because this deal, or these deals that you want to talk about, or deal that you want to talk about today, I mean, you got in light relatively speaking, you did the deal because it's a great opportunity, which means your investors also get to ride the upside alongside you. So anyways, where do you want to go with this? Do you want to talk about the opportunity that you found and that you penciled? Do you want to talk about that next, Mark?
Yeah, sure. I mean, it's interesting. These large deals, like 100 unit and above, they don't come along very often, right? And when you
Mhm.
do see them come, it's like, oh, that'd be nice to, own a 144 unit apartment building in that's newer vintage 2003, 2008 that you could actually be a part owner in. And that it's just a rare opportunity to see the actual behind the scenes of the deal, right? And
Mhm.
so maybe I'll share kind of a few points
Sure.
of this particular deal. So this deal is actually in Charleston, South Carolina. Have you been there before,
I've
Patrick? Charleston?
never been to South Carolina. No.
It's a very pretty city. If you go through, there's lots of history there, kind of that old Southern
Mhm.
feel, and just a lot of really beautiful things about that. But the main drivers really there is affordability. Where we bought this 144 unit apartment was there's 28 to 30% of the average incomes going towards rent, so it's extremely affordable. For context for your listeners, yeah, Barrie, Ontario is really it's at 50%. The average income's going towards rent. Toronto's 60%, right? So it's like extremely affordable in these areas. The employment is really strong. There's lots of diverse employers moving into this particular area, and there's about 50 to 60 people moving there a day.
Wow.
The story of the deal, there's a couple of doctors that own this particular property, and they syndicated. They had some other investors come in with them, but they're not full-time operators. I mean, we have a full-time team of 7, and they're tired of the business and they're just looking to
Mhm.
get out. So this is a complete off-market distressed sale that we got at 27% below the peak of the market. So
Wow.
well below replacement cost at 163,000 a unit, where it's 2003 and 2008 build. There's 272 units just outside of Charleston. Um, Very strong. $320 per month upside per unit is very rare to get 100% of the units that are classics. So we can go in, fully renovate all of them, and they're larger units. They're 12 to 1300. There's 2 and 3 bedrooms, like 9.5 foot ceilings. Like we walk in and
Wow.
it's wow, 4-inch baseboards, like this stuff you never see. And so it's just kitchen, paint, flooring, like nothing major. It's going to be a simple business plan. But since we purchased till now, rents have like NOIs actually skyrocketed through that like the couple of months there. And we're just going to take it to that next level. And then kind of the cherry on top of this deal, which a lot of your listeners will appreciate, that with the higher interest rates, we were able to lock in a 4.93% blended fixed debt loan.
Wow.
So the first loans on this is at 4.12%, and that's
Wow.
fixed like 7 years. So it's really, really strong deal. I just, anybody that's listening, if you're going to dip your toe in any deal with us, this is the one that you don't want to miss out on.
So, Mark, you guys, your team, Ferris Capital, your team has a ton of experience. You guys do your diligence. I know, you really said it. It took a long time to even find this deal and to decide that, no, this was a deal to move forward on. Give me some idea. What's the advantages of working with Ferris Capital Partners?
Well, yeah, I mean, so I'm a Canadian myself. I mean, we still, the residential brokerage side Ferris team, we still do about $1 billion in sales volume a year. So I love Canada.
Hmm.
So I'm a Canadian. This was built, our structure was built for Canadians to easily invest down in the
Yeah.
US. So all of our Canadian investors, they invest in a Canadian limited partnership, and they get a simple tax form at the end of the year, just like they would in any other Canadian investment. We look after all of the taxes in the US side. We push the returns up to the Canadian side. So it's very simple. That is a big differentiator with what we're doing. The other thing is the type of deals we buy. We won't buy anything unless we can return 5% distributions and on the investment made for our investors. So every deal has to cash flow, and it needs to return 18, 19, 20% plus annualized return. So you get paid now, and you get paid later.
Right.
The other thing in regards to like our experience, not only do we bring on a family office as a partner with that has 6,000 units, but and then John and myself's experience on the real estate investing side, but we both scaled businesses prior to this to 8 and 9 figures prior to launching Ferris Capital Partners. So there's fruit, and I always say if you're going to invest with somebody, what's the fruit in their lives before actually taking that step forward? And there's a lot of fruit there.
Beautiful. Mark, thanks so much for your time. Folks, if you want to click on the links that are in the description, take a look and reach out to Mark and his team and have a conversation about this particular deal or some other deals that they've got going on. And I want to say, Mark, thanks for your time. Thanks for what you're bringing to the table. Appreciate you as a trusted partner of the Real Estate Investment Network. And we're going to connect again real soon.
Thanks again, Patrick. It's always great.